been very, very bearish up to now, and then they kind of, what looks like a pump and dump, isn't it? It's a classic example of what a pump and dump should look like. They've been trying to sell, they've been trying to sell, they've been trying to sell gold, and every time they come into this area, they get jammed. So this looks like a perfect pump and dump example. So now that we know it looks like a pump and dump, why would we think it's a pump and dump and not a bullish trade? Because of the same storyline we've been talking about in gold, on oil, and that is the background dollar narrative. If you look at the background dollar narrative, you can see that gold is relatively straightforward. So we've got this enormous volume. We've got a prior swing high. We've got some overnight highs, which just seem to be massively under accumulation. And all we've got to do, guys, is draw straight lines. And every time we draw a straight line, what do we find? A trade. Every straight line finds a trade. So there was a possible sell trade there. And then there was a possible sell trade right there. 2 straight lines, 2 possible trades. And obviously from that, you can see massive value divergence. We had to wait for this to really run out of juice here. You can see obviously the blue line is massively premium to the red line on a macro scale basis. And then of course we start to watch for that changing. We start to look for these areas. And what we're looking for is things like snapback type trades, volume type trades, time of the day type trades. Well, 8:55 on a 1 minute chart, guys, we're pretty close to that top of the hour trade. The volume becomes incredibly powerful. And you can see it's got a snapback quality about it. It's not an arbitrage, but it does have a snapback. Now, when you're looking for an arbitrage, you're looking into this pullback here. You can see it's teeming with arbitrage. That candle there at 9:05 is an arbitrage sell. So if you never got the top edge sell, you got the arbitrage sell. It's arbitrage. And obviously, if you sold the 33s, within the next hour, you're trading 23s for $1,000. The easy stuff really isn't that difficult, guys. The easy stuff really isn't that difficult. Find value, find your timing, get your trade on, and start making some monies. How difficult can it be, guys? You should all be able to tell me that that value was very definitely bearish. You should all have been able to then recognize the opportunity. Should all have been able to recognize the stop, and you should all have been able to recognize the trade. Volume can be the trade. They're the trigger for the trade. Levels can be the trigger for volume. They all start to show up in the one place. Value and volume at price. You see it, you simply can deal it. Nothing difficult about it at all. The gold at the bottom edge was just as easy. You can see it wasn't an arbitrage, but it was a nice snapback trade with massive volumes. And you can see we ran the stops here. The value was dropping short term, but the value was bullish macro. Then the value went bullish short term in line with the bullish macro. 2 values now lining up together. Massive volume comes in. At the same time, you can see the snapback trade comes in. It's not arbitrage, but it is the snapback trade. And you're able to buy off the 20s. The trade's just traded 25 for another $500 of profit using this simple concept of levels. And maybe say, well, what would you be doing into this level? Well, I can see that we're starting to see a change developing again. The value in the background is very bearish. I can see the shape. Now, this is a fast money rejection with balance in here. So obviously, we've gone above this value area here. So obviously, we're thinking to ourselves, right, well, if we were really, really, really bearish this, we would obviously want to get sell side below this 23s. So if you don't like fading highs, then you wait for 23 to go bearish, and then you start selling off the 23s for the short sale. If you don't mind getting into trades like that, what are we waiting for? We're waiting for an arbitrage. We're waiting for a snapback. We don't have it on either of those two on this green candle just yet. See how the pink line drops and the blue line drops? We don't have an arbitrage, nor do we have a snapback. So our timing isn't there yet for this short sell. If it was, I'd be taking it. That's for sure. Now, there is another reason why we're currently passive on this. Real yields did decide to fall off just a little bit. And for that reason, of course, we are just a little bit more passive at the top edge. And I'm certainly not keen just yet to sell 1725s. But I might be looking at it in the next few minutes. I might not. But at the moment, I am not short selling gold. Not short selling gold. So welcome in, guys. I hope you're all good this morning. It is Thursday the 6th of October. In terms of data this morning, the Aussie trade balance came in slightly disappointing at 8.3 surplus against the forecast of 10. So quite a disappointing number for the Oz. German factory orders again massively disappointed. Minus 0.8 forecast came in at minus 2.4. Very, very disappointing for the German numbers there in terms of factory orders. Not a good look at all. Construction PMIs in the UK did improve significantly, 52.3 against the 48.1 forecast. So that was a good number for the UK construction PMI. This afternoon, we do have pretty limited slim pickings this afternoon, to be honest. Unemployment claims in the US at 1:30. IV PMIs out of Canada at 3. Natty gas storage at 3:30. And that's it. And then in the evening session, or the late afternoon London fix session onwards, we do have an awful lot of speakers. We've got Bank of Canada speaking. We've got MPC member speaking, and we've got 3 FOMC members also speaking from 4:30 onwards. So lots of central bank gossip, lots of central bank sound bites, but obviously we'll be in class by then, and we don't really have to pay much attention in terms of trades, but certainly look over what they have said, see if it's changed any of the narrative. You should get quite an easy read from it. You'll see the markets moving if any of them have changed their tune. So quite a quiet afternoon, guys. Probably not a bad thing after a kind of really quite a vigorous few days of volatility, haven't it? But it's certainly a little bit quieter than it was before. In terms of key levels, we've had this big S&P top edge, as you well know, around about that top line was 16s down to around about the 10s area. And you can see obviously that if we look at the S&P in terms of those 16s down to the 10s, that was one of the big structures we gave you last night in the tweets. And you'll see that 16s down to the 10s area, you can see is where pretty much all that selling came from. Tested, 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 sold, 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 and a big drop off down to the 60s. So again, another key reference very, very visibly in place there. Now, we haven't seen anything yet at the 70s. So obviously this is now another key reference area that we do have some real money interests in. We haven't yet seen the decisive battle taking place for the 70. And obviously if we lose control of the 70s, it could open the door to the slippiness coming back through. And I do like the short sell on the S&P Nasdaq narrative at the moment. I do like the short sell. The value is indeed very bearish in the background of this at the present moment. And you can see that just from simply the chart we drew out for you. And we did tweet it out as well. We suggested that the S&P has to go above 37.80 for the bulls to take control. Guess where the selling came from? 37.80, correct? You see that? The price had to go above 37.80 to take the chart bullish. And obviously when it didn't succeed here and you got a nice little failed auction, it was sell side value all the way through this storyline. What a great opportunity to sell some Qs or sell some S&P into these upticks. And you can see that that's turned into a very, very nice trade. Now, there's no selling coming in behind this. So obviously if you're in a short sell because of value, you recognize that it never brought in the selling that you thought. And as a result, don't be too shy about taking some monies, guys. Make sure you bag some of that cash into that level too at 71 evens. Sell side 77s, taking some profits at 71s, yeah? All good? All good today, guys. All good.